The long and contested US presidential election is drawing to a close, and the focus has now shifted if we'll have a clear winner on the morning of Wednesday, November 4th. In my October update, I'll cover the COVID-19 status update. We'll go over the status of the US economy and the markets, and lastly, I'll touch upon the polls as we head into the presidential election week. Greetings viewers, you're listening to Aman Sangha, independent financial advisor with Cart Wealth in Mississauga. So it's widely acknowledged that we are in the middle of a second wave for COVID-19. And if you look at the graphs in front of you, probably the only good thing that you can interpret is that the death rate has not spiked in the same way we are seeing in the spike in the total number of cases. Now another way to look at the same data is to see it by per population million by geographical areas. And if you look at the chart on the left, it's clear that the cases are spiking in Europe, in UK, and I'd argue in US as well. Now just for the US, if you look at some of the modeling data, it indicates that the worst might be still ahead. So we look at some more uncertainty to continue going forward, especially for COVID-19. Now with this spike in COVID-19 cases, it is undoubtedly to impact the underlying economy and the markets, which are both trying to recover from the bottoms that we saw earlier in the year. So let's start with just looking at the US economy. And if you can see, there was the Q3, there was a big spike in the growth rate of GDP, but even with the spike, it's still at the bottom of the trough that was seen in the 2008 financial crisis. And you can see that the easy part is behind us. There is still a long, hard road ahead. The economy itself, now we agree that there has been recovery, but it's starting to show signs of fatigue. And it's not helped by that there has been a lack of another stimulus package from the US Congress so far, and it looks like we won't really have one till 2021. So what does this all result in? Now, if you've been following the markets, there was a sell-off in the last week of October, and if you look at the numbers, the bonds were relatively flat, but every other asset class gave away the gains from the earlier part of the year. So what caused this sell-off? Nobody will know really for sure, but of the three factors, I've already covered COVID-19 and the lack of stimulus from the US Congress. And the third probably could be a lack of clear winner of the US presidential election. Now this shows that the polls show, and is shown on this graph here, on this picture, that we likely have President Biden as the next, Joe Biden as the next US presidential winner. But we know polls have been wrong in the past, and they could be for this time itself also. So that could be a third factor, that if we do not have a clear winner on November 4th or soon after the US presidential election, we could see a period of long political uncertainty, and markets do not like uncertainty. So just to conclude my October update, we continue to be in the midst of an uncertainty which was brought on by COVID and the resulting political partisan environment we find especially in the US, and how this unfolds. Until we get a clarity of a clear picture of how to combat COVID, or we have political uncertainty, what we are seeing now is likely to replicate itself for the rest of 2020 and beyond. Thank you so much for watching. Bye for now.